Hi there, traders. This is Brad Gilbert with today's trading action. All right, now there's some tricky market conditions in play here at the moment. It's more the underbelly of the market that is moving things around, and it's sometimes hard to see. Now, a lot of the movements on the US dollar, which has sort of rallied across the board overnight, is based off the US yields, right? They're drifting higher amid fears about the Japan intervening in the FX markets, also higher interest inflation in Canada and Australia contributing there as well. Now, oil prices also sliding as a surprise build-up of inventory. So we are seeing a bunch of different things come into play, but it's very hard to see. Like you look at the charts, right? And if I just bring over my pen, you'll see that the dollar has had a pretty good sort of day. I mean, Euro's just resting back on that support level around sort of 106.80. Dollar Swiss a little bit higher. Sterling's pulled back. Aussie, we had some stronger inflation numbers, but that was sort of pushed back into its box. And the Kiwi, well, no good news there, just a stronger US dollar. Now, dollar CAD higher, oil is falling, so contributing to that move up in dollar CAD, and dollar yen just cruising to the top side. Now, pretty hard to see the BOJ intervening when the dollar is so strong, right? As I said, it's a bit of a waste of time. They will do it at some stage, but I think doing it right at the moment would be crazy. And like, don't be mistaken. This is hard to see for everyone. And what I'm talking about is where are the movements in the markets, right? Well, take out the currencies for the moment, because they are sort of a little bit, they're just doing their own thing, right? We're seeing a bit of dollar weakness in the Asian session, which is pretty commonplace, right? If we have European, North American sessions, the dollar rallying, well, when the market closes, it sort of drifts lower again in the cycle. But we are seeing pressure on the downside in the equity markets. And this is from the US treasuries, right? As I said, slowly higher. The 5-year sort of really attributed to where the increase is in the yields. So, like, if you're just sitting here looking at the markets, looking at your charts, looking at the various bits and pieces, you wouldn't notice that trend was in play. So just be aware, sometimes, the moves come from a left field event. And what we're seeing at the moment is sort of left field underbelly stuff, right? So you got to keep an eye on the treasury yields for sure as we go forward. Now, just looking at the market, right? And this actually goes some way to saying, well, what are we got to focus on from here? Well, definitely the US Treasury auctions, right? Got to keep an eye on those as we go forward, because they are sort of really shifting things around. Now, you come into today's market, we've already had some numbers out of New Zealand, a slightly weaker business outlook, right? We've seen the Kiwi sort of drift a little bit lower on that, but that's sort of pretty much stalled. Now, we come into the European session. There's a bunch of sentiment numbers coming out. Definitely worth having a look at those and seeing if there's like the same behavior happening across the board. But then we get into the US numbers, and you've got the durable goods, which is a very good historical number. And you got the weekly jobless claims, the GDP numbers, and the PCE price final numbers. But we do have the PCE price index on Friday, right? So this is where we can sort of get a bit more information around what's going on. There's a couple of auctions here later on in the day, and natural gas, I'm not going to sort of worry about that too much, but that's where we are at the moment, right? And just looking at these treasury auctions, look at the US numbers, see what's going on. You'd think for all money that we did have some explosive fundamental numbers out of the US, but we didn't, right? All we had was, the treasury yields going up, which means higher interest rates in the US. And then you've got all these other geopolitical things like the BOJ, will they intervene or not? Higher rates in Australia, Canada. It's almost sort of pointing towards getting close to like, okay, maybe the US is a safe haven here. Everything's sort of like getting out of control. But this sentiment can change very quickly, right? Now, that doesn't mean you spend endless hours in front of the screens just watching the US treasuries, right? Keep an eye on them as we go forward. Absolutely. But just understand the cycle of the markets. The key at the moment is identifying treasuries as the driver. Then you would know exactly what's going to happen with the equity markets. And then you can start to see if there's any uniformity across the major currency pairs. Now, the Kiwi is the only, like the dollar block that's not going up. That's probably primarily due to those ANZ business numbers, sentiment numbers. But the dollar, as I said, during the Asian session is going down and the rest of it's going up, which is opposing the natural risk on, risk off sentiment. So just be aware things are a little bit skew-iff at the moment. That's only because of we're in the Asian session. Now, I would expect the US futures, right, they'll continue to go lower as long as these bonds, treasury bonds go up, right? And as we go into the European session, you would expect that risk off sentiment, right, where Euro, Sterling, Aussie, Kiwi go down and the dollar to rally, come back into play during the European and North American sessions, right? And that's where the US numbers can come into play, because the market will be looking very closely at the US numbers and overlaying that with what's going on in the market at the moment. And then you can start to piece together some sort of rationale around what's going on with the dollar, right? Durable goods, GDP numbers are pretty much usually close to the mark. The weekly jobless claims, these are just some of the things that could impact when the markets are behaving quite fickly like they are at the moment. Okay, so now I come back to look at the major pairs, and I'm trying to piece together like potential trading opportunities. Now, the one that sort of stands out to me just at the moment is Euro, right? If we see those treasury yields in the US continue to rally, well, Euro's got to go down. Okay, so it's the one with the best technical setup at the moment. That's where I can see a bit of value. You look across the board, you know, you might see a bit of a flush out here of the Aussie, but Euro looks ready. Sterling's already gone, as has the Kiwi, as has dollar CAD and dollar Swiss. So really, technically wise, Euro is a bit of a standout, maybe the Aussie, right? And to get more perspective, because we've been dealing with this a little bit, like these false starts. If you have a look at your daily charts, you can sort of isolate the instruments that are sort of potentially ready to go, right? Aussie's at the top end of its range, as is sort of the Kiwi. Sterling's in the middle of the range, but Euro, it's sort of looking to break down, okay? And, well, dollar Swiss, it's in the middle of a range, as is dollar yen, and dollar CAD, well, it's back in the range as well. So I'd be focusing on Euro. That's sort of got the best setup, but just understand the markets are behaving a little bit peculiar at the moment. It's only when it goes a little bit weird that the US treasuries start dominating, and they are at the moment, right? So watch the bonds, watch and if you haven't got access to the bond market, watch the equities, because they are reacting to what is happening in the bonds. Higher interest rates in the US, lower equity markets. So if those treasury yields start to fall, you'll see the US equity futures start to rally. And that's when you know things may shift around. All right, guys, all the best. Good luck. Cheerio.